Welcome back. Today's probably gonna be the longest video ever made. My name's Jordan Vera for the new folks in here, or JV Trading on Twitter and the exchange on Twitter as well. So there's two ways you guys can follow along, right? But what I'm gonna teach you guys today is pretty much my strategy from A through Z. It's gonna be an hour long. Now, I personally don't like watching videos like this, and I don't like making videos like this because then you overfry your brain with too much knowledge all at once, and it's what I say don't do. But there's been a heavy request for this, so I'm going to make it. Now, the good thing is there's a couple videos under this channel already that you guys can watch each single category that I'm going over individually, so that way you're not overworking your brain too much. So like, for instance, the highs and lows will be on its own, the fibs will be its own video, the order blocks will be its own videos, right? So you guys will have that. Now, yes, we also have, YouTube's for free. You guys can watch us live on Tuesdays to Fridays, 8:30 a.m. Central to about 10:30 a.m. Central. You guys can go that route for free. There is about a 15-second delay on that. I do also have a paid community on Discord, but like I said, you guys can go two routes, whatever you want. You want to go to YouTube, go ahead, right? It's all completely free. You guys can learn, or you guys could go to the paid community. We have a little more service there. Like I said, I do overviews every day, so explaining like what we're looking for, making a video, what we're looking for into the next day, giving you guys the levels. We have recaps that we do every single day. We have mods that alert for us as we're live as well, so typed out alerts as well. We have the news channel, so every news that gets put out in the same day, same minute, it gets posted as well. Pretty much a lot more benefits into the Discord, and like I said, most importantly, there's no delay like there is on YouTube. Okay, but today what I'm going to be teaching you is my full strategy from A to Z. So first things first, before I get started, I want you guys to get familiar with what trading is and what the chart looks like, right? So I hope that if you're here, you have some knowledge of trading. So the way I trade is pretty much using time frames into a domino effect, right? That's the way I see the market. So the way I like to start off is off the larger time frame. So if you guys are completely new, you guys see these up here. These are just essentially the time frame each single candle is. So if we go to the M, that starts for monthly. If we go to the W, that stands for weekly. If we go to daily, that stands for every single day. So Friday, Thursday, Wednesday, Tuesday, right? 4 hour, every single 4 hour, the candle that close at every single 4 hour. This is the hour. Every candle that close every hour, the 30, and so forth. You guys get it, right? So the first thing is I'm teaching you is highs and lows. But before I do that, I want to show you something in just without the candles in the market that I look for. So obviously we know the market works in two ways, right? Well, most people think it's just up, 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 up. Well, the market works up and down, right? And you can always play both sides. You can play the upside and you can play the downside. Don't ever be scared to play both sides, and don't ever marry a bias. Okay, so on an uptrend, meaning bullish, right? In an uptrend, we essentially need to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, boom, 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 right? Now, just thinking of that very naturally, if you're making higher highs, higher lows, higher highs, higher lows, that it's already telling you that means that it's not getting below the previous low there. Now, what do you think might happen if it does get below that low, right? Let's not overthink trading. Let's keep it very simple. If it's making higher highs, higher lows, that tells you it's defending that low that pushed you up. So it tells you if it does break that low, it's going to look to shift the uptrend into a downtrend, meaning now we are bearish, right? That's for an uptrend up there. Now for a downtrend, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so forth, right? So what does that tell you? If it's making lower highs and lower lows, if you don't want to see those lower highs get broken above, so you don't want to see these get broken above, because then that tells you it goes from a bearish trend into a bullish trend. But this is also a great sign of telling you if it's continued to break those lows, it's a great sign of it wants to continue the trend to the downside, right? So everything in trading, to me, I've been trading for 7 years, and I've used so many different strategies, so many different mentors, so many different discords that I've been in. Everything is pretty much the same: support and resistance, supply and demand, ICT, smart money, all this, it's all realistically the same. It's just a different terminology that we use. There's maybe about 10% difference, but realistically, it all comes down into market structure, price action at the end of the day. Trading is about two things: probability and risk. For you, your job is just to find out how probable is this setup you're looking at to work out, and then your second part of that job is to see how much are you willing to risk to see how much you're willing to make, right? Always find out your risk to reward. Okay, so let's go ahead and get started here. So first things I'm gonna teach you guys is highs and lows. So I like to start off the larger time frame. So like I said, we're gonna start off the monthly. So we're currently November. This candle is not closed yet because we're still in November, November 23rd. We have a couple days left. So I'm going to mark up October's high. So this is gonna be the previous month high, meaning that's the highest point we went for last month, right? Okay. And then I'm gonna mark up the lowest point that we went into last month of October, which is the previous month low, right? So just like I said earlier, if it's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, it means it wants to continue the uptrend, right? But if it decides to at some point either tap the low or consider to break it, and it does break it, that tells you it switches from a bullish trend to a downtrend, right? So in this situation, so far we already tapped the previous month low of October. We're currently holding it, but let's just a little quiz for you guys. If we were to break this low here on the monthly and in what 7-8 days, we will continue to the downside, right? That's just quite the obvious, just looking at the highs and lows in market structure, right? Cool. So we have these larger time frame levels marked up. Okay, let's go into our weekly time frame now. So currently today for me is Sunday, right? Now we're gonna start a whole new week at 5 p.m. for Asian session. So weekly, this is last week, so I will mark up the prior week high. So this is being my previous week high. Since we're starting a new week, I want to see what my range is from last week into this week, so I know what to play of continuation. Whether it breaks the high, continue higher. Whether it breaks the low, continue lower. Excuse me, right? So previous week low here. So I have those levels marked up. I'm gonna put alerts. I always put alerts so I don't have to sit here and watch the charts. Okay, so we're gonna put alerts here and then put alerts here. Cool. So now we got our monthly highs and lows. We got our weekly's highs and lows. So now we go into the daily. So on the daily, like I said, this is every single day, right? So we're going to go into the prior day. So this right here, I know it's my previous day high, right? So this is my PDH. For me, it's going to be my previous, and I label these white, my previous day high. If I would have actually not put cancel, it would have worked. My previous day high, okay. Put that, and then I'm going to just where I have my previous week low, I'm just going to move it down a little bit so it's closer here, and I'm going to mark it white as well, but I'm also going to put a dash and make sure it's the previous day low as well, right? Okay, so far we have almost every larger time frame I need here, and I need to identify my range. So let's keep it very simple. If we look at the charts, right, let's just say we're like I said earlier, we're going up and down. You can grab any point in the charts to find your highs and lows. So let's say something like this. If my computer decides to work with me, boom, 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 boom. Let's just say you want to grab any point in the chart. So you want to grab the highest point, right? If we grab the highest point, let's say this is a high for us, okay? Now you might be like, why are we just grabbing any point? It makes it easier for you to go backwards than try to guess forward, right? You only guess forward. Your probability only works out when you look at the past data and see what structure you're currently in. So in this situation, to really sum down highs and lows, for me, it's like I said, uptrend, higher highs, higher lows, higher highs, higher lows. And like I explained, if we break above the high, then we look for continuation. So for me, as you guys can see, we broke above the high, so it's a great sign of continuation. That tells me I now currently have a new high. So if you have a new high in the market, you also formed a new low, meaning that new low that caused breaks, which is this one, the last down move that caused the break above this high, is the line of defense that needs to hold for the market to continue up. So you can see something like this. See how this one held? We didn't break below. If it comes down, holds. If it comes down and holds it, right, then you look to continue up. Now, if it comes down and breaks it, then the trend switches from bullish to bearish, and you look for a retest to continue lower. So like I said, just grab any point in the chart and follow it backwards, right? So that's an example of a high and low on the uptrend. Now, let's show you guys on the actual chart. Okay, so for me here, right, I can grab, like I said, any point in the market. Let's grab the highest point that we know is going to be our previous month high, right, which is a double top here. Let's say this is the highest point. Now, let's say none of this was here. Now it is for us because we know, obviously, right, the time passed. But let's say none of this was here, and let's press a replay so you guys can kind of follow along a little bit better. Let's say that this is here, and this is all-time high. We don't know what's going to happen, right? The only thing you currently know is you created a new high because either your previous high broke, right? So what did I say to do? Follow this backwards, follow backwards, follow backwards, follow backwards. And if you can see, a high on your prior price was here, right? Why? Because it seems like we couldn't get above, couldn't get above, couldn't get above, and we finally broke above. So if we broke above the high and this is your new high, like I said, follow it backwards. So let's follow this backward and find our low. Okay, so we know that on the daily time frame, this here was our low right here. This was our low that created the break to the upside, right? So this is now the last line of defense that needs to hold for continuation of the uptrend if it ever comes down to this low, right? So let's press play. Let's see what happens. Okay, I was like, it's not working. Okay, you see how the defense line held? It held, pushed up, right? Okay, boom, boom, boom. Held again, and then it finally broke. So held once, held twice, held 3 times, and then it finally broke. So that tells you that's a great sign, especially on the daily time frame. A larger time frame holds more value. That tells you that the market structure has now shifted from bullish to bearish. And then most importantly, I'll teach you this later in this video, it's a buy to sell model, meaning it formed an M for you. A buy, now that you sold, now that you got confirmation, right, to sell off, a buy to sell model, right? And then you target your next larger time frame. So in this instance, you should already be prepared with your previous month low, previous week low, previous day high. So if the daily broke and retested, what's your next target? You already have it in your chart. Your next target, if it comes in retest to continue lower, you target your previous month low. And as you can see, we target that previous month low and had a nice little bounce from it, right? See how very simple. Keep it very, very, very simple. All right. Okay. So now that we're in the daily, I like to use the larger time frames, these here, as external ranges, and then anything inside for me is internal ranges, meaning smaller time frames, breakage in smaller time frames. So let's say your range is here, as you can see, right? Your range is from here to here. You want to see a break anywhere in here in small time frame to target those external highs and lows on the larger time frame. Okay, so let's go down into the 4 hour and see a little example. So if we can see here, let's just say, let's grab the highest point, which we know at this point was your previous week high, right? This was your previous week high. So instead of following forward, let's follow it backwards. Let's retrace it backwards, sorry. So if we go backwards, we know that currently it was trying to get above something. It couldn't get above, and it finally got above. And if we look to our left side, this was our last up move, right? Last up move that pushed below this low for continuation to the downside, right? Can we all agree on that? And then this was the last down move that created the break above this high here, right? So we know that this here was a continuation for downside, and then it tried to break above and it couldn't, and it finally broke above. So now it tried to go back bullish, right? So try to go back bullish, so you know that if you have a new high, you have a new low, right? So now you currently have a new low down here. So for you, your job is to wait and be patient till that low breaks if you decide to play the downside. Or if you want to play the bullish side, you have a retest. You teach this right now, this imbalance as support. As you can see, it pushed up but couldn't get above the weekly open, right? Okay, so as you see here, we broke below the low, so it's a great sign that it wants to continue lower. So you already know that on the daily time frame, it broke below the low, right? So now your 4 hour just currently went bullish too. So remember, time frame work as a domino effect. If the daily is bearish, the 4 hour goes bearish, you need the hourly, the 30-minute, the 15-minute to all follow along as well. So let's say, for instance, here, your 4 hour went bearish here, right? So your high is here. So if it breaks above this high, the market shifts this back bullish. As you can see, we came to retest. It didn't break above, right? It didn't break above. But your external ranges now was from that high to this low here, right? Because this is the last down move that pushed you up, right? So as you can see, to identify your range is from this high to the lowest point. Like I said, grab the highest point anywhere in the market and grab the lowest point anywhere in the market, and then follow it backwards, and then you can follow it forward after, right? So as you can see here, we didn't break above. But internally, let's see. Internally, if you look here, right, we came down, pushed up, right? Pushed up, couldn't get above. We pushed down a little bit, then we broke above. We broke above the high, you can see here. So if we broke above the high, all right, if we broke above the high here for continuation, right here, okay, then we broke above this high for continuation, and then we pushed down, we know we now have a new low that needs to hold for us to continue up to target the external high here, right? So we needed this low to hold to target here, right? So if it breaks, what do you target? The external low. And what happened? It broke, immediately hit that, and you see once it hit that, it had a little, it tried to have a little bounce, right? So that is currently how you play highs and low breakage, right? Shifted bearish, you play the downside, retest it, play the downside, okay? So now we look at the 4-hour time frame, right? The 4 hour is currently back bearish, so you look for a retest to continue lower into what? Your external and larger time frame. So retest to continue into your previous month low, into your previous week low, previous day low, right? Okay, let's go into smaller time frame to kind of make it a little bit harder for you guys, but that way you can understand every single time frame. Okay, so if we look here, right, let's just grab the lowest point anywhere, right, which is our previous week low. Let's follow it backwards, had an up move, had a down move, had an up move. So okay, so you had an up move and then you had a down move here. That means that it had to have broken a low for continuation, right? This is the last down move that pushed you up to try to continue higher, and then it broke immediately, meaning it wanted to continue the bearish trend to the downside, right? And it broke, continued lower, came to retest, right? So now your risk was from any retest into here, into this high is your risk, right? But I personally don't like this because then your risk to reward, enter here, stop out here, and then take profit here. It's a 1-to-1, that's not high trade. But let's just to show you guys the highs and lows, right? If it's to break above this high, you look for continuation. Didn't break above, didn't break above, didn't break above. It just chop, 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 finally broke above. Okay, so now it broke above that old resistance, turns into new support. Old resistance broke above, you have a new low now, came to retest that old resistance, turns to new support, and pushed up a little bit higher. But then, right, if we go back into our 15-minute time frame, which is a little bit smaller time frame, here, let's see, where was it? We couldn't get above this range here at first, right? We couldn't get above here, and then we finally broke above. Old resistance turns to new support, try to push up, and then now your target is the low, because we so far we can't get above our 4-hour high just yet. Okay, so that's highs and lows. Hopefully you guys understood that. I try to keep it very, very simple. Plug in every time frame. Like I said, grab it from any point in the chart, the highest point, follow it backwards. If it broke that low into your right side, then you know this is your high, right? If it broke your high, then you follow this backwards to find your low. That's your low. Simple, right? Very simple. Don't overcomplicate it. Don't overthink it. Okay, that's step 1 into my strategy. I have 4 steps out of strategy, and then I use other things as pieces of confluence. So step 1 is a break. And then step 2 is an order block and an imbalance. Now, these form 99% of the time after a break, because a break will usually happen with a manipulated move to the upside or downside, meaning a big candle that usually leaves a gap behind. So, prime example in the same range again, on the hourly, we know this was the hourly high that caused the break to the downside to go bearish. Now, if it breaks above, we go back bullish. Broke above, 99% of the time it leaves a gap in an order block. So this here is your imbalance, right? This is the gap that left from this wick here to this wick here. So to draw it out for you, always use 3 candles usually, right? So the wick of this candle left a gap between that wick and that wick candle here, right here, right? So your gap is from here to here, right? From wick to wick. Now there's no gap if those wicks overlap, right? So if I can give you an example, would be like this one here, right? You can think, oh, this one left, and it could be a big candle, but look, see how that wick overlapped that wick? It didn't leave no gap, so there's nothing for it to come to retest, essentially hold support, right? You see how that there's no reason for it to hold here, but you see how here there was a reason for it to hold because there was a gap, meaning the buying pressure was so strong that they left some gaps, unfilled orders behind, that they're going to come and fill them eventually at some point. Does it have to happen the same day? No. It can happen the next day, next week, next month, who knows, right? But you know, you have to draw and know there is a gap there, and there has to be a retest into that zone at some point, right? So you can see this is the gap. Like I said, it creates an order block and imbalance 99% of the time. So this here is known as your imbalance or fair value gap, and this here is known as your order block, your last down move that created the break above, the same thing as your highs and lows. The last down move, which is your new low, they created a break above your previous high. So the same thing, like I said, these are all the same things, just different terminologies. This is now your order block here, from here to here, right? You know that any retest into here should continue to the upside, and then if it breaks below this low, then you know the trend shifted from bullish to bearish now, right? Can we all agree on that? Very, very simple. So for me, I usually label these like this, a little bit lighter red, my imbalance, and then I do these bright red. That's my order block, right? Okay, so that's step 2 is identifying an order block and an imbalance, right? Pretty simple, pretty straightforward. Now step 3, it's using my fibs, which is a Fibonacci tool, to find entry, but most importantly to see where we can react. Now I want you guys to pay attention to this. Yes, do these work like 90% of the time? Yes, but nothing in the market is ever 100% guaranteed, and know that. Anything you use, any strategy, any tool you use, yes, it's to your edge and can have that conviction, but never be overly confident, right? So a prime example here is I'm going to draw the fibs. The fibs for me, I use it to be able to find an entry or where I can expect a reaction, right? And I'm going to show you how I plug it all together. So step 3 will be a fibs. Step 4 will be a retest into those fibs. So let's say, for instance, let's do a replay again of what the heck? Oh, wrong one, sorry. Let's do a replay of here. Okay, so so far, step 1, let me actually draw it here so you guys aren't confused. So step 1, break highs and lows, breakage, break high or low. Step 2, OB and imbalance, right? Step 3, fibs, and then step 4, a retest, right? Okay, so these are my 4 steps of my strategy. Step 1, a break of a higher low, meaning market structure shift to the upside or downside. Step 2, an order block and imbalance to form. Step 3, the fibs to be able to see where we can react and find my entry. Step 4, just wait for the retest. So most people would try to chase this candle, be like, oh, we're gonna push higher, fuck it, push higher, let's just smack it and continue. No, we are patient. This is why we have the strategy. So step 1 is done, to break. Step 2 is done, the fibs, step 2 is done, the order block and the imbalance. So we can go to the 15-minute, we can grab it from the low, right? We can actually, it's the hourly breakage. So let's take it from the hourly low break to the hourly high break. So that's my last low, and I grab it from body to body. Sorry, I should have said that. From the body to body. I don't use from the wick to the wick because, like I said, these are all just pretty much manipulated moves. But I use it from the body closure low to the body closure high of the up move. Okay, and then I wait for a retest into my 50%. So my 50% is known as the equilibrium, which is, you know, half of it. You have my optimal, which is the blue, and then you have the premium. These are zones I personally love. Do we get there all the time? No, but with the market being very volatile, we do. But like I said, all this is you're just waiting for a reaction to these levels, and then understanding market sentiment. Sometimes you're like, okay, the sentiment's matching with everything, I'm just gonna smack it as soon as I touch my fib. So sometimes people, the biggest question I get asked is, okay, so do you just smack it right at the fibs? Sometimes yes, sometimes no. It's just depending into the market sentiment. But here I'm going to teach you how you can do it every single time correctly. Okay, so now we're going to wait for a retest into this, right? But let's break it down to small time frames. So we know the hourly is bullish, we know the 30 minutes bullish, we know the 50 minutes bullish, and we know the 5-minute is bullish. Okay, so let's erase these big boxes just so they're not in the way. So I will mark up my fibs, right? I will mark up my 50% here. So I'll do the red line here, right? My 50% here. I'll do my optimal line here, right? Oh, sorry, wrong. I'll do my optimal line here. So I'll do it this color here, and I'll do my premium line here. Okay. So the same 4 steps again, right? I know my 1 hour's bullish, my 30 minutes bullish, my 15 minutes bullish, my 5 minutes bullish. But then I also know that I have a new low that created a new high above these here. So for me, that the way I think about this is like this. Okay, so if we somehow come and retest into these fibs, knowing that on the hourly I have now, let's press play. Let's press play a little bit. I have a gap left behind, right? On the 15, I have a gap left behind on the 5. This tells me that if we come in and retest these levels, either this one here, and we hold the 5-minute low and we don't break it, that means it wants to bounce to the upside. So let's see what happens. Press play. Boom, boom. Okay, so let's go back to the hourly. Okay, pause it. Okay. Boom, 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 boom. So see how here we came to retest it, right? So our fibs were from the from the low. Bro, why is my PC lagging? I'm sorry, guys. From the low. Brother. I don't know why my PC's tripping out. Hold on. Okay, from the low into the high, right? So this is the highest point of the body so far. Okay, go back down, boom, boom, boom. So you see how in the hourly we didn't tap the 50%, but you know that you have to be patient and wait for a retest here, right? So we didn't tap it on the 50 on the hourly. Okay, let's say if we were going off our 15-minute fibs, right? So let's say, why did I change the color of this? Hold on. If we change it and go off of the 15-minute low to high, let's see if it hit the 50%. And it did. Look at that. How perfect that was. So you knew your hourly 50% was here, and you knew that your 5-minute low is down here. You can also use your fibs on the 15-minute. Like I said, do not slowly just rely on the fibs 100% on just being wide taking entry, because you can play it on different time frames. It depends on your risk. For me personally, since this was closer towards like 1 o'clock, finished towards the end of the day on Friday, OPEX, I didn't really care for it. I just left it on the hourly. If I was trying to play this very aggressive, there's two ways I could have gone: on the 15-minute, or before I even mark it up, I'm gonna tell you it most likely 99.9 sure it hit either the optimal or the premium level if I went to the 5-minute. Because remember, now you can play your structure like this. So let's remove the hourly fibs real quick, and then I'm show you what I mean by this. So we can play the 5-minute structure, and just if we're playing very aggressive, we can take it from our low of the 5-minute here into our high, and look at that. Fucking beautiful, perfect sniper on the premium level on the 5-minute. So then you are able to identify your risk to reward. You can find entry here, your risk here, and your TP1 will be right at the high that pushed you down. And then TP2, your targeting was the high up there, right? Which in this situation was the previous high. But you would target continuation of highs of external here, because we didn't have anything else here. This is the first TP. After that, you want to target external highs. But that is a prime example how to use the 4 steps into every single time frame. So you see how it was beautiful on the 5-minute, but this is where you have to be able to realize, okay, if I'm playing the 5-minute, it's a more aggressive trade. It's more likely to fail than it was on the hourly. Me personally, I would have waited for the 1 hour. I'm not gonna lie to you, I would have waited for the hourly because it's a beautiful setup for me here on the time frame. It's clearly showing a sell to buy setup, meaning a W sell to buy to continue to the upside, right? And as you can see, it played on the 15-minute on the 50%, and it played on the 5-minute on the premium level. So you see how step 1, break of the highs. Step 2, this is your imbalance right here. You see the gap from this wick here to the gap here of this wick here. That's your imbalance, right? And this is your order block here, right? So step 1 was high, break of high and low. Step 2 was identifying your order block. Step 3 was drawing your fibs from the low to the high. And then step 4 was waiting for a retest. Retest, risk to reward was 1 and 2.79. Beautiful. So do you see how I plug in all 4 steps into it here? Like I said, you can use it in every single time frame. It just depends on your risk management and how you want to play. Like I said, for me, I'm being 100% transparent. Would I have taken this trade? No. It's OPEX. Close, I already made my money. Close towards the end of the day. I would have personally just waited into the hourly zone than trying to play it off the 5-minute, because it's just not my cup of tea for me. Even though it's a 1 to 2.3, let's say entry on ES 602, 20 points on ES, right, of a risk. But that is the 4 steps, right? And that is how I use the fibs. So that right there was the fibs, and step 4 was wait for the retest. So what my strategy allows me to do, it allows me to be very patient and just wait for those levels to come and get tapped. Now, like I said, there's sometimes where I'm on live with my whole community, that I wait sometimes even 2 hours for it to come hit my levels. I'm like, some people, why aren't you hitting it? Why aren't you chasing? I'm being patient because I know that has a higher probability working out than me chasing the upside right now, and then it just automatically rejects. You get what I'm saying? So it's just about probability and risk in this situation. So that is the 4 steps there, the full strategy that I use to trade. Step 1, the break. Step 2, order block and imbalance. Step 3, fibs. And step 4, retest. So then you see how that larger time frame, it missed it on the hourly, but it worked out on the 5-minute. I want to show you guys why, and it was on NQ, but let's see if it's on ES too. Why I took sells and puts towards end of the day on Friday, so closer to close, like right at 2. I don't know what exactly. I'll look at the Discord right now, but it was end of the day. So I my fibs, right? So step 1, break, which was the break of the low for continuation. Step 2, order block and imbalance. It formed the imbalance, which is the gap, right? And then the order block. Step 3, fibs. I draw my fibs from the high. Damn it, bro. This is from the high. Oh my God, I'm always messing. My PC, ever since I updated TradingView. So I got it from the high to the low, the lowest point, right, that we went. and then I just wait for a retest. And then look at that. It came to retest my 50% right here, right? So now, like I said, do you automatically smack the 50%? No, I'll be lying to you if I told you I would have automatically sniped that and hit it at the 50%. No. Now, I'm going to show you exactly how you can trade this and how I would have traded this here. So let's just kind of clear this up. Let's just put the 50% real quick. Let's say this is where we did reject, now let's say, but this is where we rejected. I will now go into small time frame, because what did I say in the very beginning of this video? Time frames work as a domino effect. You need the 5 minute to match, you need the 1 minute to match, you need the 15 minute to match, 30 minute, and boom, boom. It's like a domino effect. You push one domino, they all go falling. So same thing with time frames. So for me here, I know that we tapped the hourly 50%, but the 15 minute it's currently bullish. So what I need is this 15 minute low here to break for me to continue to the downside on the 15 minute time frame, right? So I will mark this up here as my 15 minute low, right? This will be my 15-minute low here, and I will set an alert here. Okay, now let's check my 5 minute. Is my 5 minute bullish or bearish? So I'll grab from the highest point where we rejected and follow it backwards. So I knew that we had new highs here, and I knew that this was a high here that pushed down to continue the breakage up, right? So push down, okay, rejected, and then we finally broke above. So I now have a new high, and if I have a new high, I have a new low, right? So now that I have a new high here, I currently follow this backwards and find the lowest point that it pushed down before the break, which was here. This was the last down move before the breakup, right? And then I wait for a structure shift. So like I said, would I have smacked the 50% immediately? No. I would have waited for it to shift to the downside, which is here. Would I have gotten a sniper entry here? Yeah, if I would have just smacked it, but then I wouldn't know where to stop out, because I would just be like, let me just hold it. No, I want to have confirmation. You always want to wait for confirmation. Be patient and be confident. So now that I have the structure break here, I can play the downside, because now it can confirm for me to the down move. So now, how can I target this? What am I going to target? So I can take entry here, stop loss at the high, a break above the high, not a wick, not a hard stop. I need to wait for a closure above that 5 minute high, because we shifted bearish on the 5 minute. So think of it like this. Like I said, time frames work as domino effect. So if we came and tapped into the 4 hour 50%, meaning the 4 hour breakage retest zone, and then my 5 minute has now gone bearish, I need now my 5 minutes from going bearish to target my 15 minute to go bearish, and then my 15 to go bearish, my 30 to go bearish, then my hourly to go bearish. And now I have 5 minute bearish, 15 minute bearish, 30 minute bearish, 1 hour bearish, 4 hour bearish, and dailies bearish. So boom, everything lines up like a domino effect, like I've been explaining. So my risk to reward entry here, risk here, 101.76, right? You could TP1 right at the low, would make sense, but then you target the low, or use your fibs as another piece of evidence where to take profit, because you can use these as, like I said, an area where you can expect a reaction, right? So if I take my fibs from the low to high, because we know that the 15 minutes bullish, look at that, I can't make this up. Where do we bounce off? The 15 minute premium. So if you play the 5 minute breakage to the downside, you're targeting the 15 minute low, but there's going to be some blockers in between, meaning your fibs, because the 15 minute is bullish. If it wants to turn around and continue the uptrend, then you know where you can secure most of your profits. So even if you're to take it from here to TP1, which is 50%, that's still 1 of 3, right? Then take it to the premium and let the runners run, right? That's how you scale out of your positions. Okay, now if I'm to really break this down in the 1 minute, I'm sure the 1 minute gave me a beautiful entry. So on the 1 minute, let's look at here. So just looking at the chart, we knew we tapped the hourly 50% here. We knew we formed a head and shoulders, left shoulder, head, right shoulder here. We broke a butt below on the 1 minute. And if you can see, we did tap into this imbalance. Like I said, step 1, break. Step 2, order block and imbalance. Imbalance got tapped. Step 3, fibs. Let's see if it did tap the fibs, which I don't know if this one did on the 1 minute, but we're about to find out. Let's see. This is a low here. Nope, missed it. This was just a momentum trade, and it also a buy to sell setup, like I first taught you in the beginning of this video. Another M, buy to sell, right? So beautiful, beautiful, beautiful. But yep, that's exactly how I use my full strategy over and over again for both sides, upside and downside, right? Okay, now let's see if I can show you an example for a possible bounce. Let's remove this so I'm not confusing myself later on. Leave these. Okay, so now we just wait for that to pretty much pretty much break, right? Okay, so let's say in this situation here, we knew that the hourly went bullish, right? Let's focus here. Let's say that the hourly went bullish here. We broke above the high. We broke above the high here, right? So step one, break. Step two, order block and imbalance. So I know this is my order block here, right? I know I have my gap between this wick and this wick here. Small little gap, but that's my gap. Step three, I draw my fibs from the low. I don't know why the fibs does that. It's the only one doing it. So I grab my fibs from the low to the high, and then I wait for a retest. So as you can see here, once again, we did miss the 50%, barely. Okay, so if we go into our 30-minute, let's go into our 15-minute, and let's see. We knew that we currently had a new low that created a break above the 15-minute high here, so we could grab that from the low to the high, the highest point before the push down, the highest point here, and look what happened. Boom, boom, boom. We missed it. Boom. It tapped the 50%. Okay, but look, this is, you're probably missing this. That right there, right? It's a low. We also had a low here. So I could have grabbed my fibs from here to here and then just waited for a retest into the premium, which was here. And as you can see, we did have a bounce. And then my risk is just a 15-minute close below the low, because this was the last down move. The last down move that did what, guys? Broke above the high. Step one, break. Step two, order block and fit and imbalance, and then step three, fibs, and step four, retest. So then your risk to reward, if you were to look to go long here, was entry, let's say premium. Your risk is this low here, close below this on the 15-minute time frame, and then your take profits back at this high. So let's see what happened. We held, pushed up, and we finally hit our TP here, right? And look what happened after hitting the TP. It's a nice rejection. Like I said, the strategy, use it over and over and over and over again. It has a high win rate, but it just, the biggest thing the strategy makes you do is be very, very, very patient. And what most unprofitable traders are, they're impatient. They just want to take a trade just to take a trade. But a profitable trader, it's boring. Being profitable, it's boring because you're waiting and waiting and waiting for the setup. But I hope you guys saw that and you guys understand the full strategy that I use here, the 4 steps to keep it very, very, very simple, right? And I'm gonna give you guys a couple of seconds to screenshot my settings on my fibs so you guys can have them the same way. So this right here is the settings I use. So go ahead and screenshot this. I'm gonna give you guys 5 seconds. 5, 4, don't get me in it. 3, 2, 1, and there you go. Cool. And then I'm going to show you guys what indicators I use. I only use 2 indicators. I always like to say less is more, and then work smarter, not harder. So the only 2 indicators I use is the imbalance finder. Sometimes just to work a little faster for me, it marks up the imbalances, the gaps, and sometimes it doesn't. As you guys can see, sometimes it didn't, so I had to mark it on my own. But this makes it easier for me as I'm intraday trading, knowing there's a gap there. And then opens. So what the opens do, it automatically marks up the daily open, the weekly open, and the monthly open for me. So these levels as well are used as another piece of confluence for me, another piece of evidence. So meaning, let's say for instance, we went bullish here, right? We did go bullish and we come to retest the daily open again. I know that the daily open should act as support. If we get below it, the daily open should act as resistance, right? Does that pretty much make sense? Let's go look at QQ for an example on Friday here, right? So if we go look at QQ on Friday, for example, here, okay, we knew that the daily open, right, we were using it as resistance, and then we got above it, use it as support. You see what I mean? Like, you just want to use those daily opens, weekly opens, monthly opens as support and resistance. Very, very simple here. Support, right? Support, resistance, got above, support. Okay, let's see another example on the monthly open, support, broke below it, resistance. Simple, right? These are the only 2 I use. So imbalance finder by TA, if I'm not mistaken. Let's see. Yeah, imbalance finder by TA, and then the opens are by I can't remember which one it was. But you'll be able to find these. Okay? But those are the 2 indicators I use. Like I said, don't use more. You don't need more indicators, okay? Now, the other thing I use, another piece of confluence that I add into this strategy, is knowing these models, these market maker models, which is the buy to sell, all right? I showed you a lot of those today, buy to sell, and then you have the sell to buy, which is the W, right? Breaks above the high, sell to buy, right? So now let me explain this. Is very simple. Don't overcomplicate it. When are they valid? When are they not valid? Either you want to see a sweep of the prior high, right? You want to see a sweep of the prior high here and then break below the low, then that's great confirmation. If you do not get a sweep above the high and you break below the low, then 90% of the time, those are just to trap you, right? I've come to find that out. Same thing with these here. For a sell to buy to be valid, you need to break above the high, sweep the low, break above the high, sell to buy becomes valid, right? So like I said, if you look at, where was it? Here, right? So let me bring this up here. Let me close it up so you guys. Okay. So you guys see the W, right? Let's bring it up here. This is the sell to buy. So we know that the in this situation here, we're currently bullish on the 15-minute time frame. We had broke above these highs here, right? We had broke above the highs. We were bullish here, right? And we know this is our low. And look what formed here, a sell to buy. And this is why we pushed up Friday into our 4-hour rejection zone, a sell to buy, right? Which is a W. That's why we pushed up on Friday into our 4-hour zones. But you see how using these models help you, and then how earlier we used the buy to sell. So that's the W, and I'll show you where the M was. So we know that this here, right, was a little up move here, a little high here, right? Couldn't get above. Finally got above, so we broke above. We know that this is our new low, right? We broke below the low, and then now that we broke below the low, what did we form? Boom, 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 buy to sell. And that's an M. See how simple? Why is it valid? Because it swept the high. Swept the high, got the structure shift to the downside, retested. Your risk was this high here. Your risk was this high here. Once it breaks above it, then it becomes invalid. And then continue lower into your TP1. Very, very, very simple. Let me see what else am I missing on my strategy to teach you guys. That's pretty much it. Just kind of momentum, plugging in. Like I said, once it taps the fibs, go into the smaller time frame. Like I gave you that example, that smaller time frame to find entry in a smaller time frame. So now the smaller time frame lines up with your larger time frame, like a domino effect. That's all you really want. But this strategy will help you become profitable. But most importantly, guys, it will help you become disciplined and patient. Okay. So please, please, please. There's a couple more things in the strategy that I need to break down. But this is all I want to give you guys for right now to not overwork your brain. And you guys can watch each sector individually in the channel as well. But I really hope you guys enjoyed this video. I really, really hope you guys found it informational and learned a thing or two about everything here. That is the way we trade in our community. Like I said, you guys can join the lives on YouTube every single morning from Tuesday to Friday. It is completely free, but there is a delay because I know most people get into trading. Either you're trading prop firms or have very little capital. Some people don't want to spend money. But I would tell you the best thing you can do in trading is invest in yourself. But you can use the YouTube for free, watch my videos, watch the lives for free, or you can join the community to learn a little bit quicker. These setups and these strategies I just taught you is the same way I teach it before we enter the trade on live trading. I'm like, okay, we broke here, we're grabbing our fibs from here to here, we're waiting for the retest, boom, 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 and I make the overview every single night. The community has a little bit more to put in, a little bit more to offer, and that is why I charge for it. I've been doing it for 7 years. Most people are like, why don't you do it for free? I do this is for free. All this is gonna be for free for you guys, but at the same time, sometimes when something is free, you don't put in the full effort. You don't put in the full, like, you don't go in all the way because you're not really spending money or investing in yourself. So like, I don't care. You know what I mean? But I will put a screenshot recording of the Discord, which all included on there as well. And then it is Black Friday. I'll give you guys a discount code. But I hope you guys enjoy this. Take care. Peace out. Please give it a like, comment, share, and subscribe. And I'd really appreciate it. Thank you guys. Okay, so here I'll show you guys the Discord. So this is where we have the public chat where everyone can talk. This is where we have the alerts for the options. So as you can see, either I'll alert it or my mods will alert it for me. So like, for instance, I'll say, like, if I have one play, I'll alert it, but most of the time my mods alert it for me immediately, right? And then the futures channel for NQ, this is where we post, right, the trade. So if I'm on live, they'll type it out for me at the same exact minute, right? And it'll tell you, you know, when the move up stops, for example. Let's see where they put it, right over small. It tells you small size or heavy, high conviction, when to move up stops, when to trim, And then the news feed, like I said, every news that's getting hit on the tape immediately gets posted on here as well, so you have access to this. And then the lounge, where everyone can chat, post their charts, ask questions as I'm live. The profits and losses for everyone here for the week, for the day, every single day, boom, 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 boom. All right, and then where I go live trading. And then, like I said, I do overviews every single day, so I post the videos, as you can see, every single night to watch and prepare for the next day. Look at the dates every single day, so you're prepared. Laboratory is the recaps that we do as well, right? Market watch, the calendar, meaning what red folders, what news we have for the week. That's just my mentorship. There's another thing here, but that is pretty much everything you get into the Discord. Like I said, a little bit more bang for your buck and a bigger community that, you know, you have people here asking questions and a lot of profitable traders with big payouts as well. So you can learn from them or two. But yeah, that's the full Discord there.